Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss with you some changes taking place in Hong Kong. I'll give you a little bit of the background on forming companies in Hong Kong, how it might or might not be useful for you going forward. It's not especially great news, but I will discuss it with you anyway and maybe help to direct you in some other better places to go. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the all notifications bell. Thank you for your support. If you'd like help with where to set up companies internationally, actually they help forming them. We can help you form companies. We can help you open bank accounts. We can help you get residency permits and citizenships, etc. Please reach out to us. You can book a call, calendly.com/Michael-Rosmer, link in the description below, or send a message to our websites, offshorecitizen.net and offshorecapitalist.com. All right. So in October, the EU greylisted Hong Kong, and their specific concerns were related to the base erosion profit shifting action plan version 2, and talking a little bit about how there was a concern over Hong Kong companies that have no substance in Hong Kong being able to benefit from tax-free passive income. They clarified that supposedly they were not concerned about Hong Kong companies' treatment for ones that have substance and are local, etc., and potentially not for non-passive income, although that one's a little bit more iffy, but specifically in this scenario. So since then, Hong Kong has been kind of responding to this, etc., and what they have said is they're going to change their rules in order to make that no longer possible. So let's back up and talk about how the situation works in Hong Kong. Hong Kong is not a super low tax country on the surface. It's 8.25% tax up to about $300,000 US, and then over that it's 16.5% tax, so not too crazy. Foreign dividends not taxable, capital gains not taxable. There's some interesting things around royalties that don't necessarily work that great for Hong Kong. But you could also get something called the offshore exemption. The offshore exemption allows a company to basically say it fails the operations test. There's no operations taking place in Hong Kong, and as a result, there shouldn't be any tax in Hong Kong, period. And this has been a pretty successful thing to do. It's basically the equivalent of having a non-resident Hong Kong company. The process of going through it is a little bit, it's a fairly lengthy process and a little annoying. But that being said, it has been popular for quite a few years. Now, I've traditionally been the person who digs into like more nuanced solutions. So for quite a few years, people were promoting Hong Kong, and at the time I always thought Gibraltar was better. Then some things changed so that Gibraltar banking was no longer really an option. Just quickly why Gibraltar was better. You could get away without the audited financial requirements, and you didn't need this whole offshore exemption thing. So that was much better. That sort of became more difficult when you couldn't bank so easily for Gibraltar a few years back, and Hong Kong became semi-attractive, although the banking in general had gotten somewhat tougher. Over the last number of years, it's rare that we've recommended Hong Kong. Hong Kong is not usually a hyper attractive place the way that it was, not really the hyper popular place. Obviously there's concerns about China, etc. But there are some situations where Hong Kong tends to work out pretty well. And so unfortunately, those cases are usually in one of two scenarios. One is you have a company that you're benefiting from as a holding company with basically receiving capital gains, dividends, etc., or you're taking advantage of the offshore exemption. And it looks as though they may be denying you one or both of those. We'll see what the actual final rules coming out are, but it is not a great sign for people who have Hong Kong companies. So something to be aware of. If you're looking at an alternative, please reach out to us and we can discuss what might work better for you. But that is coming down the road, and I would expect that realistically they're going to continue to impose these types of rules on other places. So let me know what you think. If you have any questions, put them in the comments below, and I'm going to look forward to seeing you on the next video.